So today we're going to talk about positions that we might have taken over the last week since we really focused on trade setups. We put everything together last week and hopefully you took some trades. So I'm really eager to know what trades you took and why you took them. I'll just keep my charts here and just walk me through your thought process. And so, yeah,
Did you want me?
which ticker?
I went with Apple.
Okay. So you can just tell me, like, I'll draw them as we speak.
Okay. Yeah, so I had my let me go back real quick. So I had my fib on the daily or on the hourly drawn from February 23rd on that low, going to that high a couple of days later, or on the actually same day from the 23rd at 11:30 to the 23rd at 6:30. So I had it drawn from there, or I should say actually 11:30 on the 23rd to 7:30 on the 23rd. So I drew that
So
fib.
about roughly here, right?
Yeah.
Roughly about like this.
Yeah, in that area. And so that was my fib. And then I saw there's a couple gaps, right, that we had. First of all, we had a gap there around the 154 area, another gap in the 151, 152 area. And then the third gap was in that 147 area. So those were the three gaps that I had drawn out. And then I had a supply zone in the kind of like the 146 area right there. And then
So hold on. Supply zone
demand
or
zone.
demand zone?
Demand zone, I should say.
Okay.
We had a demand zone right there. We had another demand zone at the, I should say that the 148 area that got filled right when it hit that area right there.
So
And
this
then
area, so is this from here that this one
a
here?
little bit farther back, You see that big, yeah. So that bar right there. So you see the
So if
up
we say
and
roughly, if we say
yeah,
this roughly, right? So it's okay.
exactly. That's
So
actually perfect.
so did you ignore? Did you consider this field, or did you consider
I
this field?
actually, so I actually considered the first part filled because the filled, it bounced up again, and then I kind of had a choice to say, do I consider it filled and draw that gap, or keep it going? So I actually considered it filled and just drew the gap instead.
Yep.
Uh,
I like that. I like that. Thought process is good. Okay.
yeah. So I drew that gap, and then I was like, okay, I'm gonna see what happens, over the next like 2 days, and then immediately the next day, it kind of dropped down, and then it filled that gap, and then it looked to me like a
Hold on.
bounce.
Let's pause here. Let's pause because when you are here, I'm gonna delete. I'm gonna delete the fib for now, just for just a second. When you are here, you have no gap.
No gap.
Right? So when you said the very next day it dropped, so here is when you created the gap.
Exactly.
Right? So that's when you created the gap.
Yeah.
And then the next day is when you see that gap fill. Is that what you're saying?
Yeah,
Okay.
exactly.
Okay.
So I was like,
Yeah,
okay,
because I want
yep.
us to, as you put your drawings in place,
Hmm.
don't have a hindsight mentality, right? So imagine you're not seeing the future.
Okay.
Yeah. Okay.
So that's kind of what happened. And then I saw the gap got filled, but then I saw it kind of try to reverse back, and then it used the supply zone as support right there.
It used the demand zone as support.
or yeah, demand zone. Sorry, I should say demand zone as support.
Yeah.
And then I saw the next green bar right there. That it's like a hammer, an inverse hammer,
Yeah.
right there. So I was like, okay, I'm gonna use that as my entry point, and then I entered right the next bar, um, right, so pretty much right after it opened that next bar.
Okay.
Um, so I entered that position, and then
So
I
where's
guess
your
it kind
stop? That
my stop is right below that. I used my stop as the support. Sorry, the demand zone.
yeah,
Yeah,
so
a little
right
bit.
below. Okay.
Yeah,
And
right
then
there.
where's your target?
So my target, let me actually go back. So I have the first target is actually at 150 is where I had it. And I just used the extension tool. I used the position from the 8th where I saw a similar move like that, um, where it had a little bit bounce back. If you look at that position right there, yeah, you
This
can
one
use
here.
that one. Um, that was one of the ones I used.
From this low
So
or from this low?
from I used it from the other low.
This one?
So I said, okay, yeah, exactly.
Okay. Okay. That's fine.
Um, that's the first one. The second one I used from the 23rd, that small move up. If you go to the 23rd, right, the 22nd almost actually. Either one of those will work. Yeah, either that one right there or the one before. Yeah. So I said that's another measuring point. And then the last one,
That one. Okay.
I mean, it's pretty much kind of like that area. So I used those two. And then I also just said, let me just draw my fib. If I just drew another fib on top of this and just that move, not the entire fib, but just a smaller fib, just to see where my, yeah. And I said, okay, so even the extension kind of lines up with the first exit point. So I said, I'll use the first extension as my first exit, the negative 2.72 as my second, and then if I want to keep some runners, depending on how it goes, then I might keep some until the negative 0.445 or 0.618.
Okay.
But that's kind of how I used um, my potential exit targets, and it was kind of heading in the right direction. And then all of a sudden, right below my first exit point, it just reversed and dropped. So I just kind of let it run. I mean, it didn't hit my stop loss. So I was like, you know what? No point in panicking. Let me just see what happens tomorrow, and then I'll make a decision on which way I want to go, whether I'm going to cut this loose or let it play out. And
Okay.
mentally, I'm going to buy myself 2 weeks of time. So I'll kind of just consider 2 Tuesdays from now as my kind of, or 1 week from now, kind of I need to make a call between now and then whether or not I'm going to exit at a loss or maybe a slight profit. But I'll make my call in a week
So
from
you
now is
have a
what I,
time stop and a distance stop, so which is good.
yeah, yeah.
Okay. So I have a couple of things that I find a bit challenging in this trade.
Okay.
And but before I say that, hopefully you have journaled this trade, right?
That actually did not journal. I didn't have time. I took it this morning, so it was pretty fresh in my mind. So I'll probably journal right now after
Yeah,
we get done today.
yeah. Please do journal it because I want you to put down as much information as possible why you took this trade,
Mm-hmm.
and if it works, why it worked. If it doesn't work, why it didn't work.
Okay.
So, so my challenge with this trade is, what is your overall bias for this for Apple? Right. When I look at the monthly, right, we always start with
Mm-hmm.
monthly, right? So when I look at the monthly, we're above the 38.2. So fantastic. So we're in an uptrend.
Mm-hmm.
So far it aligns with your trade because you're going to the upside. So weekly, same story. Except when you come to the weekly, and you can kind of see it on the monthly too, but easier to see it on the weekly. Lower highs. We talk about lower highs always, and an upside down at this supply zone. Bam, bam, right? You see it, and boom, it got rejected. So you have this inverted hammer that is driving the price down. So lower high. For the short term, we have a downward pressure for the short term. But we're staying above the 38.2. So on the weekly, you can see it. Supply zone, we got rejected with an inverted hammer even on the weekly. So my bias is again to the downside. But we're staying above the 38.2. I would have preferred somebody take this trade here when we hit the green zone with a hammer versus chasing it up here. So then when we go to the daily, right, same concept, lower high, but when you draw your daily fib, again, one thing I like about this position is it's hard to see this two red lines line up. You broke that 78.6, you broke above it, right? So if you look at this, is actually a beautiful thing to see. Which one was I going to show you? I want to go to the daily. Oh, I clicked the wrong thing. Okay, so when you are right here, this is a good example. When you are right here, you broke above the 78.6, right? That's our reversal indication. We're having downward pressure, and now we broke this last fib 78.6. Fantastic. Now, when you go forward one bar, you see this happening. That's this bar here. So this is the day that it broke out. The next day, it kind of tested this as support. If you recall, I say if it breaks out of here, test it as support, and does not close back down below it, take it. Right? This is what we've been studying. But that overall picture is important. It's not just, you have to put the whole thing together, right? And in today's conversation, maybe you've done that and you just didn't say it. I don't see the overall picture put together. Right? I just see, hey, I just saw this one thing and let me take a trade. So just some cautious. It might work, but it doesn't always work, right? That's why the idea with trading is stack the odds in your favor. If you're just trading on one thing, two things, you're not stacking the odds in your favor. So just one thing I want you to consider. So here, this was fantastic, right? It tests here and it goes fantastic. So we can go forward and we can see it play out. What happened? It goes up to the supply zone and it is struggling. Right? We can go back one. It goes to the supply zone, it is struggling. It comes back down, it goes to the supply zone, right? It's struggling. It's struggling. So it doesn't make a new high. It's actually starting to make lower high. And look, again, lower high. It's now this area is moving sideways. This area is moving sideways. So we're staying above 78.6. If you had taken this trade and your stop is somewhere down here, you just got stopped out.
Mm-hmm.
Okay. So this above here would have been, it's time to get back, right? Above this line, it's time to get back to the upside.
Mm.
However, once we're back down to that area, I personally am not comfortable to take a trade because I see still downward pressure. Does that make sense?
Yeah.
Yeah.
So when I drew my fib,
Yeah.
I actually drew it much closer. I moved it because I called it a reversal because it made a new high.
Where
If you
reversal
if you
from where?
if you zoom out a little bit further, so right when we made that new high, I said,
This
okay,
one here?
yes, I said, okay, now when we've kind of broken the 78.6 and we made a new high, I just redrew my fib and said, this is broken now, so I'm going to redraw it to the upside. Would that not be the right thought process there?
Okay. I give you that. I agree. So let's go back to that.
Yeah, and then I drew it to the upside. Yeah, exactly.
So let's do that. I like this conversation, right? So now when you draw that to the upside, can I take this one out? This one is just
yeah,
a bit confusing.
yeah,
So and then let's take out this guy
and
here. So
yeah, and
this trade we missed, right? So we know we missed this trade. But
yeah,
we're still in this trade because we were until we got stopped out. So, but when you drew it like this, you didn't take this trade. We come down to 23.6. We come down to 38.2, and now you want to take the trade.
exactly.
At
The reason I didn't
38.2.
the reason I didn't take the earlier one is you said you didn't want us playing reversals. So I waited until the reversal was complete and then it made a couple highs. And then I was like, okay, now this is a continuation, right? Kind of the reversal's done. And I actually even moved my my fib higher. So I drew it from the low on the 23rd.
So let me say one thing.
Okay.
When I say do not take reversal, what does this chart say? Is this an upward trend or a downward trend?
Yeah, this is an upward trend.
Okay, because it's an upward trend, I don't want you to take a reversal up here. I don't want you to say, I'm done, I'm going back down. That's what I mean by reversal. Testing a fib level is not reversal, that's a continuation. I'm continuing in that same uptrend. Right? I'm not, so I just want to be clear. I don't want you to consider terminating this pullback as a reversal. Reversal means the long-term trend is reversed and it's now the opposite side, right? Upward is now downward.
I see. Okay.
But a retracement and finding an entry at the retracement, that's actually the entry that we want. That's an area of value. You don't want to miss those. Those are the ones that you really want to take.
Okay.
So when you come to the way you drew this, fantastic, I like it. When you come to your 38.2, right? When you come to your you say it's close enough. I have this sideways. I break out of this sideways. I want to take this trade. I want you to think of it this way.
Okay.
Right? Yes, what you're thinking is not a bad thing, right? You're just saying, hey, is this really a confirmation? So I made a base, I made a high, I made a higher low, and can I take this trade? It's not wrong, right? It's not wrong, but taking it down here would give you an earlier entry, and it's actually the entry I want you to take because we come to an area of value. area of value, we have a flag, railroad tracks, engulfing, hammer, we take it.
Okay.
And then personally, an inverted hammer, I take it only to the downside, right? Personally. I know you've said a few times, I've heard you say this a few times. Like if you see hammer inverted or not, you're gonna take the direction you want. Like for me personally, if I see an inverted hammer, that's a sign that the bears are in charge. So I don't want to take a bullish position.
Okay.
Personally. Again, it's all about the learning, right? So you might say, hey, I like these trades. I know people who take these hammers, no matter which way, upside down or straight hammer, they will take it to the direction of their initial thought process. So
Yeah.
I'm not saying you're wrong. I'm just saying that's not how I trade.
Okay. Let me actually. I want to write that down real quick.
Yeah. Okay.
Inverted hammer, downside only.
Okay. So I like your demand zone that you've identified down here, and I like that when you came to that demand zone, you pulled the trigger. So the only difference that I've kind of pointed out is when I like your analysis. I like everything about this position that you have taken. What I say like is you've analyzed it and it fits what you analyzed and you took it. I don't care about right or wrong. Right? I want you to take it because you've analyzed it. Right? That's why you journal and you'll make refinements. So the only thing I would recommend for you to do is take it earlier.
Okay.
If you think this is I'm in a long term uptrend, I want to take it, take it. Right? Now
Okay.
this 38.2 on the daily is your sweet spot. Right? This whole big uptrend, 38.2 up, 38.2 up. So you can see how it's really a strong support.
Yeah.
Right? So but
Yeah.
we keep making lower highs and we keep making lower lows. So I'm a little bit more cautious. Right? It's easier to the downside. Macroeconomics, geopolitical, everything says uh, to the downside.
Okay.
But it's a good trade. It's a good thought process. So let's see what happens over the next few days. I also like that you have a time exit. If it goes sideways for 2 weeks, I'm out.
Yeah.
So write that down too, right? Write that down. Like I took my entry X date and I gave myself 2 weeks. The reason why I want you to write that down is it will help you understand if 2 weeks is too long, too short. Especially if you keep giving yourself 2 weeks, 2 weeks, 2 weeks all the time and you see that it works, you can take option positions 2 weeks out. Right? You don't have to pay more for a 30-day out option position. So write them
Yeah.
down. If you find that's not long enough, then your option position will also just keep extending that way.
Okay.
Okay.
Sounds good.
Okay. Very good. No, very good. I appreciate that thought process. And I'm glad we talked about the long-term fib, like how I drew it down, it broke, but you also thought that it broke and you redrew it this way. It's exactly how we've been talking about. So it's a beautiful setup that you have. Now let's just play it out. It's this I said you could have taken the trade earlier, so we have to assume whether you take it here or here, it's really not that far off. It's actually as an entry, it's better entry that you took it down here versus at the open here, right? As an entry, it's a better entry. I just want you to have a different mindset on when you want to pull the trigger, right? I want you to pull the trigger as quickly as possible. The more you
Okay.
wait, the more expensive it becomes. In this instance, it worked in your favor. Fantastic. So you use
Yeah.
the same stop loss, right? Personally, I would put the stop loss a little below the 38 point, but
Mm,
it's up to you. That gives you a 1-to-1 roughly.
okay. Yeah. The only
Okay.
reason I didn't quite, take it right away
Yeah.
was because like let me just see what happens the next day because it could keep going. This is an area of value, a flag. But we know it's not flag isn't as strong as like a hammer, So and I saw that there's a supply zone above it, but it makes sense even if there's a supply zone. It already filled it twice, so maybe this time it's gonna blow through. Who knows? But I told myself I looked at the previous lows before that one,
Yeah.
where it made that low and then it bounced up and it bounced back down right away and then it bounced up. So I was like, you know what? Let me just see what happens the next day. And it just shot up right away and made that gap. That's why I was like, okay, well, now that it's already shot up, I don't want to chase, I told myself. So let me see what happens and see. This is now a supply zone, right? When it opened on Monday, or sorry, a demand zone and a gap when it opened. So I told myself, let me see what happens and see if it kind of uses it as support. If it does, then I'll enter. And then I saw it close the gap, and then it used demand as the demand zone as support. And I was like, okay, this is now confirmed for me at least, based off what we've learned. So I told myself I'm going to take it right there when we opened this morning.
Okay. So don't be afraid to take them sooner. Right?
Okay.
You don't have to say let me wait. Now, the only thing I did not hear that, and if you had said this, I would have said yes. This gap here, right, on the 24th, 23rd to 24th, we have this gap. If you had said, hey, we just opened inside this gap, I don't feel comfortable because we're inside this gap. And it could be that we touch the top of the gap and we come back down, which is what it has done,
Yeah, that
right?
too.
Now, if you
Yeah.
said that, then I'll say, okay, great. But the
Yeah.
supply
I
zone
think,
up here, look how far you have to go.
yeah.
You get a 2.5 to 1, right? Reward
Yeah.
to risk. So this is
Yeah.
something I'm willing to take this.
Mm,
So for this reason, you should just say, "Hey, I'm taking this."
okay. Nice. Yeah.
So
Not
just pull the
actually.
trigger. Pull the trigger. Don't overthink.
Mm,
If everything we've learned comes together, pull the trigger. It's okay to be
yeah.
wrong. You're paper
Mm-hmm.
trading, right? It's okay to be wrong because in your journal, when we get to 50 trades, we have made enough adjustments that you're not
Mm-hmm.
worried about these things.
Yeah. Yeah. Now that
Okay.
actually you said it, I do remember now because I had drawn it when I in the morning on
Yeah.
Monday, so I could clearly see the gap. So I think I was kind of skeptical, like, hey, it might reverse back down. So I wanted to see like if it bounces back and uses that gap as support and the demand zone as support. But then I deleted it right after because it was in
See.
that zone and it created another gap right
Yeah.
after it, right? So I was
Yeah.
like, so now that you mentioned it, I do remember considering that. Yeah.
Yeah. Cool. And we have this gap here, but this gap got
Yeah,
filled here. So
exactly. That was
yeah.
my final confirmation. I was like, okay, now that is just like, it's not only a gap, but it's also using the demand zone as support. So I was like, now it's time to enter. Yeah.
Except I don't like
Yeah,
it. That's my
that was,
problem, right? That's my problem with this trade,
yeah.
right? So even if you say it like this, you use
Yeah,
this points. Yes, we broke above it, and it seems like it wants to test it. So that's really where my hesitation comes. But sometimes they work, sometimes they don't.
that's true.
So fantastic. I think we've had a good conversation.
Okay,
Uh,
nice.
yeah. So switching to spies, there were a couple of opportunities. Actually, I think you can see it better in the queues. Yes, in the queues. So last week Tuesday, right? Last week Tuesday. Uh, on Tuesday, I said if we test the 38.2, we take it to the upside. Or if price comes up and rejects, we take it to the downside. And then the third one, which was way down here, is when price comes to this demand zone, we can take it to the upside. So these were some conditions. So these are just guidelines, right? And so there's a couple of things that happen. I'm still biased to the downside. I've said this for a few weeks, right? I'm still biased to the downside. So when I take this trade, it's quick. Like I don't have this target up here of 2 to 1. I'm here, I'm gonna continue to make lower highs. So when I see price open up here and it goes to the downside, I'm out immediately. Like the first 10-15 minutes, I'm done. Because it opened up and immediately starts to go down. When I'm biased to the downside, I prefer to just be out and be done. But it gave us another opportunity. When you see this to the upside, it's this has just happened, right? This happened. So this circle just happens to be much smaller. It's much smaller, it came much quicker. So yes, it doesn't fit. I don't have an inverted hammer. I don't have railroad tracks. It doesn't fit that, so you don't have to take it. But this gave us this opportunity. Down, hit the 38.2, up, but then it didn't make a new high. Right? It actually collapsed from there. So this was our. So we have this, we have this. You have to be nimble in this position. If you bias to the downside, you can say that one I want the target, right? If I'm entering here, and my stop is here or slightly above here, this one, because I'm biased to the downside, I want to wait. I want to wait and see what happens. Yes, we got down, we got a nice profit, but then we gave some of it back, but we're moving sideways. I'm still biased to the downside, so I'm just going to wait for this position. Right? So this is how I think about my positions. So with that, now let's just say, let's prepare for new entries for this week, right? Let's give ourselves what are opportunities. I don't like in SPY. If you didn't take this trade, or in Qs, if you didn't take this trade, and you're targeting somewhere down here, it's giving you this pullback and forming a flag. So as soon as we break this low, this is where I have an entry to the downside. This area is my entry to the downside. Because we're still making lower highs, it gave us a sideways movement, and because we missed an entry here, we can take this entry here. To the upside, if the market wants to really be strong and go to the upside, we've just made a new demand zone, right? We've made a new demand zone. So if price comes in, it only does this. It keeps going. If it keeps doing this to the upside, right? If we come to this demand zone, or we come to this gap here, and we have a support there, we can take it back to the upside. But because I'm bearish, and because I'm going to take this trade, I'm going to be cautious here what happens in this demand zone, but I'm not keen on taking it up to the upside. this is where two people could have different views, right? So 38.2, that's where price is, somewhere around there, between there and 50. You might say, you know what, it might come down to 50. That means it's going to close this gap, come down to 50, take it back to the upside. That's a possibility. So those are the two trades that I see in the Qs coming up.
So you'd still take it even though it's a demand zone and a gap right next to it?
Yeah, I'm very, very strongly bearish right now. I think we're gonna go back down at the very minimum to the October lows right here. This is October. At the very minimum, we're gonna come back down here. That's how I am preparing for my trades.
Okay.
But this part is opinion, right? It's not chart.
Yeah.
But there's some chart to it. Lower highs, we came down here, and then we made a series of higher highs, and then we stopped making higher high. And we're making lower high. So look at it from here. Lower high, lower high, lower high, lower high, lower low, and then we made higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we came back down. So now we made higher high, right? A series of higher highs, but then now we're making a series of lower highs. So I think we're going to test this.
Yeah, it sounds like that's pretty strong support across as you look at it too.
Yeah, and this is the 61.8. It's
Yeah.
been holding. This 61.8 has been very strong. If we break the 61.8, oof. If we break 61.8, yeah, pre-COVID high is the next stop. That's the 70%, right? That's the next stop. And if we go all the way to the COVID low, that's a long way. That's 100% retracement, right? From COVID low back to COVID low, that's 100% retracement. Yeah.
That's when you pull the trigger.
To the upside?
Yeah.
So that's where we are for now. So let's just see what happens next week. I'm just going to leave this here.
Nice.
Any questions?
Okay. No questions. I might be waking up very early tomorrow at a very interesting time called 6:30 to take a trade.
Yes.
On
yes,
paper trading.
Let's
Nice.
do that. All right.
Okay.
Very good. So let me stop the recording.